I'm looking at an FX trade here. After a very volatile 48 hours on the U.S. political landscape, a bid into haven assets like the Japanese yen, the Swiss franc, weakness in the Chinese yuan and the Mexican peso. Are these the early signs of the Trump trade in FX?
That would be the obvious interpretation, Kriti. I mean, certainly it seems like people are kind of going, hey, wait a sec, Biden's gone, Harris is on the ticket. Has it really changed things? Trump is still the favorite, and therefore, there's no real kind of game changer there. That said, none of the moves have been too dramatic yet, and I wouldn't want to jump to too many conclusions. I think one of my biggest takeaways of the last kind of 12 hours of just talking to an immense number of participants around the world is that the level of confusion is something almost unprecedented in terms of that people are really, really uncertain of or are politically biased in their answer towards whether Harris has a chance against Trump. But even when people have high conviction over which candidate might win or whether it's a serious race or not, they seem completely divided on what the impact will be of a Trump presidency or what a Harris presidency will be. I have rarely seen such divide in markets, and that's why I think you're seeing a little bit of whiplash, a little bit of volatility. I wouldn't read too much in terms of the long-term direction from the moves we've seen in the last kind of 12 hours or so.
Yeah, the distinct lack of certainty and clarity for these markets that they try to decode US politics. Mark, what is your take in terms of the bear steepener trade that money had tied to kind of the Trump trade? So yields higher at the back end, lower on the front end, and how the Fed plays into that. Where's your take on how that trade shapes up, do you think, in the days ahead?
Look, I believe in that. I am one of those people who've incorrectly called for a steepener to happen a couple of times before in the last year, and it hasn't come through yet. I am inclined to think it can work in the second half of this year, but not aggressively so. The reason I'm concerned is I worry that the Fed will not be able to cut as much as priced. I think that they, might turn out they only get one cut done this year. In the same way that we've seen the rollback in expectations in the ECB, I think that you might get later in this year that Fed kind of go, wait a sec, is inflation really under control? Sure, they may cut in September, but will they get a second? I think that'll be very, very difficult. So I think it'll be hard for at least a bull steepening. Now, you mentioned bear steepening. I do believe in that dynamic. I think the back-end yields can definitely rise a chunk as the new president comes in, whoever it is. But I think that's a dynamic for later on in the year rather than immediately.
Mark, just one more on the safe havens. Of course, you had gold at a record high last week. How long does its climb now last, especially as the Democrat ticket potentially looks stronger?
I think that the gold momentum in isolation, in terms of a lot of this year, we had gold rallying even as dollar strengthened, which is relatively unusual. And I think that kind of dynamic is going to change in terms of pure gold strength is probably near an end. However, I kind of think dollar softens in the second half of the year. So in dollar terms, gold may still have a little bit more to make, but it's going to stop being the massive outperformer on crosses. It's going to stop outperforming things like the euro and other currencies out there.